Hey, I'm Brian Boggs with Coldwell Banker. Today we're going to talk about timing. You just got your offer accepted. Now what? Let's get started. Your offer just got accepted. Congratulations. Now what do? What do I have to do? When do I have to do it? Where do I go? What do I do? You have a million questions, so right now I want to answer as many as I possibly can, help guide you into what that process is going to look like for you when you make that offer and it finally gets accepted and you love your home and you're super excited, but you know there's a million things you still have to do and you're still nervous and you want to check it out. So let's figure out what those are, what you should do, what you shouldn't do, and how much time you have to get those things done. First and foremost, you get your offer accepted. You have 3 business days to get your initial deposit in escrow. An initial deposit is typically 2 to 3% of the purchase price. So if I do math right, I'm not good at math, but if it's $1 million home, we'll use $1 million because it's easier for me. 2% of $1 million is $20,000. So you would need to get about $20,000 into escrow within 3 business days. If your offer gets accepted on a Friday, Saturday's day 1, Sunday's day 2. Those don't count, right? So they do not count as business days. It's not business days. Even though I'm working on a Saturday and Sunday, we're not seeing those as business days. So you have until Wednesday at 5 p.m. to get your initial deposit in escrow. It's pretty good. Concurrently, at the same time there, you have a total of 21 days to get everything removed. Mostly loan, appraisal, inspection, due diligence. So 3 business days for initial deposit. That money is refundable to you. If you decide not to purchase the house, you can't purchase the house, you're taking another job, you're moving out of state, whatever it is, or we found another great home for you that you love even more than this one, you can walk away during that contingency period and get your deposit back. That's great. 17 days is the next key, okay? So 17 days to do an inspection, read the seller disclosures, check out HOA documents if there are any, and CC&Rs, codes, covenants, restrictions, get an understanding of the neighborhood, everything else that's going on there. That's 17 days for what we'll call due diligence, inspection, contingency. The other thing that falls under 17 days is appraisal. If you're obtaining financing, if you're getting a loan, you need to get an appraisal done at the property. Even if you're paying cash, you may want an appraisal done. You may want to have a third party come out and appraise the home. Maybe they measure it for you, draw you a sketch of it, and appraise to make sure the value is there for you. That's going to be a cost you're going to have to pay. So when you want to do a home inspection, you're going to pay for that. I always say, get an inspection done quickly. First 7 days, do an inspection pretty quickly. You want to know what's going on with this house. The biggest hurdle is typically the inspection. Something comes up you weren't expecting, you saw something you didn't like, and you want to start negotiating with the seller, either for a credit or repair, replace, something. So you want to do those inspections quick. Inspections cost $300 to $1,000, depending on the size of the home, if it has a pool, if it doesn't have a pool, roof, everything else that needs to be checked out. And of course, inspectors. Some are going to charge more, some will charge less. Do your due diligence on picking an inspector. Realtors have some inspectors that we've used and seen for years that we can recommend. Yelp is also an amazing resource. Yelp is going to have reviews from a lot of people. Talk to friends or family that recently bought. And then talk to the inspector before they come to the property. Have a conversation with them. Ask them to send you a copy of a report from another home so you can see what the report looks like. Is it written in a language that makes sense? Can you understand what verbiage you're doing? Do they include pictures? Do they not include pictures? Those are all really important. You're going to want to see pictures. We don't have very many photographic memories out there that you can remember exactly which outlet he's talking about that didn't work or how to crack this or this and that. You want to see pictures. You want to reference back to that. So look at a report and see examples of reports that include lots of pictures. Does the inspector walk on the roof? Does it have a drone that looks at the roof? What if it's a clay tile roof or concrete? They're not going to walk on it. How are they going to investigate the whole thing? They do video, they do camera, drones. What do they do? What about sewer line? You're going to do a sewer line inspection? Some inspectors do that for you. Sometimes we just have to call a plumber and do a sewer line inspection. That's another fee. A couple $100, $250 to have a plumber typically come out and do a sewer line inspection. So those are the two big inspections we say. Do a general home inspection. It's called $500. Do a sewer line inspection, $200 we'll say. And then you got to do an appraisal. Those, lender will be able to tell you more, but, $500 or so for an appraisal. Those are fees you're going to pay for and are non-refundable. You got to pay for them at the time they're being done. So you need to pay those. Deposit you get back. Another thing you're going to find out from the seller is their disclosures. They're going to fill out tons of disclosures. A lot of it's boilerplate. They're just going to initial at the bottom, acknowledge receipt, and you're going to do the same. There's 2 documents, though, really 3, that are really important. Natural Hazard Zone Disclosure Report. It's going to tell you a lot about what's going on in the environment around the home. Fire zone, earthquake fault zone, any endangered species, liquefaction, flood zone. Those are going to be things you're going to find out in there, a little more about the area around the home or what the home is sitting on. The other really good one there is seller property questionnaire and a transfer disclosure statement. Those 2 disclosures, 3 pages, 4 pages each or so, 7 or 8 pages, are going to tell us a lot about what has the seller done to the home while they've owned it. What's a little more history? Has there been insurance claims on the home? Have they painted? Have they added on? Any home warranty claims? Were things permitted or not? Any repairs, modifications, improvements? There's even a question in there if they have a meth lab at the house. Hopefully you've been to the house and you know if you've seen a meth lab or not. And hopefully they don't have any. But those are some of the questions that come up. The seller has to check yes or no. If they say yes, they've got to give us an explanation. If they say yes, their house has been painted in the last 12 months, is the question. They say yes, they'll have to identify what they've painted. Have they done touch-up throughout the house? Did they paint the exterior? Did they paint the interior? Did they only paint the baseboards? What did they do? So that's how those seller disclosures will work. And that's a huge part of our buying process and our due diligence time period. Other thing I always recommend is talk to your neighbors. You're about to move into a neighborhood. Have neighbors either attached to your home or 3 to 6 feet away from you. Know who they are, right? Go introduce yourself. Walk down the cul-de-sac, say hi, I'm a new neighbor, I'm looking to buy the house, I'm in escrow, getting ready to move in a month, wanted to say hi, right? Get a good sense of who all your neighbors are, what's going on. Sometimes you won't meet any. A lot of buyers don't meet any of the neighbors until they move in. All the neighbors come over and say hi and vice versa. I always recommend if you have the time to do it and the ability to do it, go meet some of the neighbors and talk, introduce yourself. You'll find, I think that what my buyers have found is they're that much more in love with the neighborhood. The neighbors are friendly, they're welcoming and inviting to the neighborhood, and they're excited to have them here. But you want to go. You're buying a big home. It's no matter what price. It's a big purchase. So you want to have a good idea of where you're buying it and what that setup was like. Then you have 21 days, right? We did initial deposit. We did inspection, sewer, appraisal. Now you have loan. A loan contingency is 21 days. You have 21 days to remove your loan contingency. Now, I keep saying contingency. A lot of times you might think, what is that? It's just our verbiage, contingency. You have contingency periods to walk away if you want. You have to check those boxes and complete those tasks. Sometimes the contingency is contingency to sell a property. That's a whole nother contingency. That would be an added layer to it. We have 21 days to remove your loan contingency. Have full loan approval, and the lender would communicate to you. And I always tell you, have the lender put in writing. Email them, say, I'm due to remove my contingencies today, all my contingencies today. Am I good to do this? Is everything good to go? Do you need anything else from me? Have them email you back. Yes, remove your contingencies. Good to go. Right? Get that in writing from them. Because that's the biggest hurdle. Loan approval having that set up and being comfortable with that, having a lender you trust. And that's why we talk about in another show, having a lender you trust to work with, that you believe in as your best interest that they're looking out for continuously, right? The realtor should do that, and the lender should do that in conjunction. We should all be looking out for you as the buyer, best interest when buying a home, negotiating for a home, getting a loan on a home, all those things. So after 21 days, you don't just automatically lose your deposit. It's not automatically given that you remove them and we're good to go. Each step of the way, if you're going to remove your contingencies, you have to sign a form. It's called a contingency removal form. It's really easy. It has a bunch of check boxes. You can specifically check a box, inspection. I remove that contingency now. Appraisal, if I want to remove that one. Or you can check a box that says any and all. I'm removing any and all contingencies. Once you do that, then your deposit is at risk if you decide not to purchase the home. If you decide after 21 days, you've signed off on that, and all of a sudden you decide to go buy a different house or not buy this house, your deposit is at risk of being lost. There's a lot more steps involved in there that likely gets attorneys and arbitrators and arbitrations and mediation and all those kind of things would happen to determine how much or any or all that deposit is lost and given to the seller and have that worked out. That'll be a whole nother show potentially. But really, 21 days is the key. You enter a contract, you have 21 days to commit to buying the home, and you're locked in to buying that home during that time. Tricky part is 21 days is negotiable. If that home has multiple offers on it right now, they might be looking to shorten those contingencies. And as long as you're comfortable and you discuss that with your lender, inspector on availability, you can shorten those contingencies down to make your offer more appealing, potentially. So just know that's a negotiable term, just like price is negotiable and all those extra details. So if you like this video on timing, you got your offer accepted and what's next, hit like, comment, ask me some questions, and if you could, I'd appreciate if you subscribe to our channel. Thanks and have a great day. See you soon.